It looks like Bitcoin gave us that pullback that we were expecting on Friday, and we have bounced away from that so far this weekend. So in today's video, we're going to talk about what to expect when the market opens this week. And I'm also going to take you through a few altcoins that I covered on this channel about 3 weeks ago. I'm going to show you what's happened since we covered them, whether or not I would stay in those trades or have they not moved anywhere, and I'm going to look for other opportunities. So if that is kind of stuff that you are interested in, be sure to smash that like button nice and early, hit subscribe if you're not already subscribed, and let's first take a big view of Bitcoin and we're going to work our way down. So I'm going to start on the daily for Bitcoin. The reason that I'm doing that is because I actually exited all of my trades this weekend on Friday before we had the pullback. And the reason that I did that is, I've been holding my leverage trades for 2 weeks now. I've done really, really good. And sometimes it just feels good to secure that profit and just be out of the market and just totally refresh. So that was what I decided to do this weekend. Obviously, I'm only talking about leverage trades when I say I'm out of the market. I do obviously still have a spot portfolio, but now that means that I have to do a total reset starting from scratch to see where I believe we are and where I'm going to be able to get back into the market once the market opens in just a few hours time. So when I zoom out on Bitcoin, I want to take us all the way back to the absolute low of the bear market. And you can see here that I've marked out how the rises and levels have played out so far. And when you look at this, you can see on the daily time frame that I've marked out 3 rises here before we went into a retracement. Then we had a new W formation for another 3 rises here. Now those 3 rises only equal 1 rise each on the weekly time frame, meaning that on the weekly time frame we've had 2 rises. What I find interesting about this chart, actually 2 things I find interesting about this chart. Number 1 is that the pullbacks between each 3 level rise have only been around 20%. So I find that to be very different so far in this cycle. Whereas prior cycles, we would see 30 to 40% pullbacks, and that would be normal. We seem to be really slowing things down in this cycle so far, but I do have a worry about this, and that worry comes from the volume. So what I want to focus on here is the volume since the peak of the bear market. So we can see that we have this really, really big spike here, which was that big drop down in November 2022, which essentially formed the left side of the daily time frame W and started basically the bull market from that point on once we create a higher low. But what I'm kind of not loving is that ever since that point, all we've had in this whole rise up, even up to 52K, is declining volume. So that's really concerning to me. And I want to compare that to the last bear market bottom, which was the COVID dump, because what it's showing me right now, it's kind of a confirmation that the only people playing right now are people who were in crypto anyway. I want to see some crazy retail volume come in, and I still think that at 51K, the masses haven't come in yet. So that's made me want to analyze this whole cycle here to see when did the masses come in back then. So we had the COVID low, which was here, and we pretty much had declining volume, very similar to now, all the way until about here. So the volume first peaked in 2020. That was about 223 days from the bottom. Now, when we look at the current cycle, we're well beyond the 223 days. Like, retail really should be coming in at this point, and I'm not seeing it, which is a pretty big problem. Now, whilst it's concerning that price is rising and volumes declining, it's also not all that surprising because as we get to the final rise, the volume actually should decline until we have that big higher time frame reversal signal kind of come in. So whilst the trend is your friend, nothing to worry about, but definitely keep an eye on it because this is showing that things could change fairly soon. And when I say fairly soon, just remember I'm talking about the daily time frame, and that could take 4 to 6 weeks for anything major to happen, but if it did, I still think that anything major would be an amazing opportunity to buy anything that you have not yet been able to buy because it just took off without you. So not a huge concern, but something to watch for, because if you are wanting to take profits to buy back in lower, the opportunity may come sometime within, say, the next 4 to 6 weeks. That's what I'm looking out for anyway. Where price is currently is in the new daily vector zone, which we are kind of running out of now, vector candles to recover until the all-time high. But we finished this week just a little bit under the 50% area of that daily vector candle. So this is an area that you then start to jump down to lower time frames to see if there is any sign of a reversal coming up that may just end up being a higher time frame pullback to retest an EMA or something like that. Now, if we were to get another pullback at about 20%, let's just say we go up to that halfway mark of that vector candle and we do get another 20% pullback from there, that's probably going to be a daily time frame 200 EMA retest, because the 200 EMA would do something like this by the time all of that happened. And a daily time frame 200 EMA retest for the purpose of long-term investing, I think is a really, really good EMA to buy off. So we'll wait and see what happens if it happens. But looking longer term, that's kind of what I have in mind. Now, when we look at the 4-hour time frame, we can see here I've got 3 areas marked. These are all 4-hour vector candles back from, I think it's 2020. We'll have a look in a second. But this is a very, very important area for Bitcoin to get through next, because these were fast moving vector candles all the way back after the last Bitcoin all-time high. So this is the price action that I'm talking about now. We had some really big fast move in December of 2021, and price is currently making its way through this one right here. And we can see that when it returned there back in 2021, we rejected at the halfway mark, and where price is now is also at the halfway mark of that one. So because we've got these 3 vectors in a row, if price can get through that halfway mark, which is at 52,350, I mean, we should see a fast move up to about 58K, which kind of sounds crazy, but this area has never been recovered since. So if you follow the rule of fast move down, fast move up, then we consolidate, it is possible that there could be a little bit more of a crazy run to go up through some of these candles to recover them before we actually do get any kind of decent pullback. So when I come back to the current price action, you can see here how it rejected that level exactly in many candles. So very, very interesting. The 4-hour time frame is the cluster of vector candles to watch for now as we make our way through them. Anytime we reject, and if we're holding above the 50 EMA, you would still remain bullish, but you're always going to be looking in this zone. You're always going to be looking for stopping volume candles to give you an idea that maybe what's going to follow is an M formation reversal. And as long as you don't have that, there's not really a reason to exit, and you probably should stay bullish until you actually have that. So let's have a look at the 1 hour then. So the 1 hour is where we're going to pay attention to the liquidity, what price has done all weekend, and whether we can catch some hints of a potential reversal. So I've marked all of the kind of decent liquidation zones on this chart, and there's a couple of things that I want to highlight here. So this zone here is really just a return to the retracement bottom at this point in time that happened on the weekend. And we do have people waiting to long if we do return to the bottom, currently at about 50,650. The one below it lines up with the 200 EMA, which would be a really nice retracement, a good opportunity to take a long position if we were lucky enough to get down there, but we may not. But keep it in mind just in case we do open the week looking bearish. Above price, we've obviously got a zone that is equal to the highs, but we also have shorts currently waiting at 52,500. And then above that, we have about 53,350 to 53,650. So there's decent liquidity both sides of price, which means if I want to get an idea, I now have to turn to the candles and just see what is the structure that I'm seeing right now. And I have to be honest with you, this week it's difficult. This week may turn out to be a week that I may not trade at all if it doesn't become more obvious, but I will tell you what is standing out to me. What is currently standing out to me on the 1 hour time frame is this M formation right here. We have a drop down that broke the 50 EMA with a vector candle, and so far this weekend we've just been recovering. Now this price action I'm not paying huge attention to because it's retail price action. So that's why I'm a bit uncertain. If this was during the week, I would say that this is an M formation. This is a retrace. It's going to create a lower high and we're going down more into these zones. But because it's a weekend, we're dealing with irrational retail who could have seen this move here as a buy the dip opportunity and they could just keep buying the dips. I don't actually know, but if I'm looking at the method specifically as the method is, and let's just take out the timing, which you really can't do that because the three most important elements is the pattern, the timing, the levels. So the timing is so important. But if this was to be happening during the week, I would say we have had drop level 1. We have 2 more drops to go. And that could look like a drop here to take out this liquidity, a little bit of a bounce on these buy longs here, then a drop 3 to take out this liquidity, buy at the longs here. It's going to be a 200 EMA retrace. Then we look for the W formation. That is what makes sense to me right now. We break through this zone and we break through these current short orders at 52,500. Then it's likely we're going to create a higher high. And this idea of another 2 drops down to the 200 EMA, that would become invalidated. I don't like that we're going to be going into the dead gap zone in a couple of hours, which is a really highly manipulated time of the day. If something around there, the end of the weekend into the dead gap zone, if it gave me a spike up a little bit high, like, a candle that looked like this, I don't really care where it is, as long as it doesn't break above into this blue zone. If it looked like this, but it was red or magenta, that would give me more confidence that, okay, this was the retrace before a further drop. Now, when I use this, I want to know what this one right here is, because that lines up with the short orders. That might be what they take before we do actually have a reversal, because look how much there is below price as well. But this mouse is not scrolling over it, so I'm pretty sure that it's this one here, and that is 52,109, pretty much where we are have spiked into twice today already. So this might already be the start of it coming down. Look, if I'm going to short, I like to short from the highest price possible, and I may be a little bit too late. I will just wait it out until we get our reversal eventually. But yeah, anyway, I'm going to watch this. If we come up into this zone, that's going to be a higher area for me to get a short. I'm going to watch this level here that we've spiked into twice at 52,109. If we get higher than that, I'm watching this zone and the short orders. If we don't get higher than that, I'll probably leave it because it may be on the way down from where it is now already. And then finally, if all of that is wrong and we do break through all these zones and we continue up higher, I would have to reset and figure out where I'm going to get in on a long position. Now, if you've been watching this channel for a while, you may remember this video, where is it? Right here, that I put out 3 weeks ago, talking about some low cap altcoin buy lists. There was, I think, about 5 coins on there. I wanted to do a recap because this was based on the 4-hour time frame, meaning that there was quite some time between the alert, which was here, to the actual entry. And I warned you about that on this show right here, that it was a very early call and I was setting the conditions for entry should we get a reversal. So I want to go over the coins that I covered in that to let you know whether we got the entry, number 1. Number 2, am I staying in them? Number 3, am I scratching them? So you can see here, the first one that we covered was Triaz. Now, we've been in Triaz for a while. $3.95 was the first time we got in, but we dollar cost average into these. Now, all of these coins that I'm about to show you are coins for the bull market. They're our low cap coins in the bull market. We may have been in some for a while. We may be getting into some now, but essentially we're just buying in little parts here and there. We don't really ever go in at one price. So our average entry on this one so far is 3.9, but we were looking to add here at around the 9.53 region. So if we look at the Triaz chart here, the 9.35 region was in here. That video is posted on this green line here. We were looking for a return to the area of interest and essentially W formation, which came right there. So the entry signal came on that one. We moved up. We ended up creating a symmetrical triangle. So if you didn't catch that one, there was a second chance entry in the Discord. We held 200 EMA many times. And I mean, if you didn't buy off the 200 EMA, you could have also bought off the breakout. So currently on triads, we're up about 68% since that video. So would I stay in this one? Yes, I would. Got to break through this level next. But when you zoom out on it, I mean, I just don't think we could have got a better entry all the way down here. I think we've done so well with this one, but it's going to head into price discovery soon. So I am hanging on to this one, and as long as it remains above the 200 EMA on the 4-hour time frame, I'm happy to hold this one. We're 300% up right now. Yeah, and just seeing what we can pull out of it. Would I get into it now as brand new? Well, now because it's broken that triangle, you would have to wait for a retest. The next one I covered was a lithium here, and the buy zone was at around 1.54, or the area of interest, I should say, was at around 1.54, and that was down here as well. So with this one, the green line here was when I did that video. We had the first peak of the W, and I said to wait for a second peak of the W. So we did get the second peak, bounced beautifully off the 200 EMA after holding it as support for quite some time. So an entry on any of these candles here, which was a couple of days worth of candles really, was a good spot to go. And currently we peaked at about 62% on this one. Would I hold this? Yes. A nice retest down to the 200 EMA, no problem. As long as it held the 200 EMA, if it did come down for a retest, I'd be happy to hold that. I can see that there is a vector candle here currently that lines up with the 200 EMA that has been tested once. We may not get back down that low again though, because by the time we do come down, the 200 EMA will probably move out and up like this. So if you didn't have it and this continued to trend as nicely as it is, it may now be this vector candle that you're looking for. By the time price gets there, it will line up with the 200 EMA. But also when it comes to these sorts of things, guys, I don't buy unless the RSI also hits oversold on the 4-hour time frame. So if price came back down here, but the RSI was still in the mid-level, I would not buy. At this point where we are in the market, I'm really only interested in buying things if they get oversold or they give me an RSI bullish divergence. The next one I covered was Nexar at 5996. Now, I'm pretty sure that this one actually did come a bit lower. Let's check it out. Yes, it did. So this was where we had the alert, but I had a zone marked on that here, as you can see. And with that one, I believe I was saying, see if this holds as support, but if it doesn't, then we want to see what happens if it comes down further into this zone. So it did come into the bottom of that zone right there, and then it gave us a nice bullish reversal and eventually broke out. This one I'm not really all that sure. It's done 39%. I mean, that's fine, but it is a bit of a struggle town kind of thing, and it hasn't created a higher high yet. So with this one, there's not a reason to exit it, but if it can't hold the 200, if it does retrace and it can't hold around the 200, even these vector candles right here, that's where I might consider just probably getting out of this one. And just, yeah, I'm not really all that sure I want to hold it for the whole cycle anyway, based off price action. It's just not giving me enough. So reassess this one if we come back down to the EMAs or into these vector candles here. And if it's looking bearish, may just cut that one. Then we have Astro Dow. Astro Dow, we can see we've been in from a low price down here. 6365 was the area to watch. And when we have a look at this again, the green line was where I did that update. We were looking for a W formation. We had potentially the first side. Out of that video, we did end up getting the second side. So that was where the entry was. We've peaked at about 43%, but this is like really quite highly volatile. So again, I'm not sure that I'm all that fascinated by this one. This might be one that I delete from my portfolio. Not 100% sure yet. I have to check with my researcher what he thinks, but based off price action, it's not all that exciting to me, and I may prefer to allocate this money elsewhere. So I'm not out of it yet, but I may be over the next week. And the next one we did was Ironfish, which we were watching at about 1.667. And when we have a look at that, again, this is where the video was. So we got, again, a really nice W formation here after that video for the entry. So just a reminder, when I did do that video, the whole internet was bearish, and I actually got made fun of for this video, and jokes on you, right? But anyway, so we had a W out of that second chance W we also got out of that as well. And now, I mean, really only in the last couple of days, it's doing something pretty decent. Peaked at 36, currently at about 28% profit on this one. So yeah, I would stay in this one. I like this volume that's come in, and also, you know, eventually it will come back for a retest. So if you're not in, again, you know, 200 EMA will do something like that, price will do something like that, and then you'll have a second chance entry. So I'm happy with this one. I'm happy with the TA on this one, and I'm happy to hold it at this point in time. The next one was HiveMapper, and we have an alert at about 178.15, but we marked out this vector candle right here for price to potentially return into any of that zone. So from memory, I think what I said was see if this forms the W, but if it doesn't, then see if you get one down in this zone instead. So if we have a look at that chart right now, that's the vector candle I was talking about. And we did come a little bit more into that vector, and then we created the W. So that was perfect, but I don't like it. What I don't like about this currently is look at the wicks to the upside on most of these attempted pushes up, and even just, you know, up, smack straight back down. So that's going to happen on a low volume kind of rubbish thing on a rubbish exchange. So I shouldn't say it's rubbish. I don't know. You might love it, and now there might be a whole fan group out there that is going to hate on me. When I say rubbish, I only talk rubbish TA. The TA, to me, this qualifies as rubbish. When I see coins that have so many wicks to the upside like this is classic pump and dump material, especially when you see it so many times, and then it's on not one of the major exchanges, is that's how I'll put it. So I don't like this. I think I'm going to exit this one, and I understand like people are big fans of this, but again, I would rather allocate my money elsewhere. Now, these coins, as well as every other coin that is in our portfolio, they are all covered in our private membership, the Capital Club membership. Capital Club includes all of our trading education as well as our investing education. So if you want to learn to trade this method as well as invest for the next cycle, the Capital Club is going to be the best membership for you. If you're not interested in investing and all you want to do is trade, First Class is the best one for you. So you can see here, there's many features. I won't go through them all, but the link to our website is down below if you want to consider joining us. Then you can get access to all of this stuff up front, and in our Discord is where I post all the charts that we're interested in. Like I said, I've already been buying. Most of us that have been in this community for more than a year, we've been buying for the last 13 months now, but I'm always updating these charts for people who are joining that are new and may want to get in soon because they weren't buying a year ago. And then in addition to that, I also let you know when I personally have purchased myself. And finally, you can also copy trade my bull market portfolio only if you are a Capital Club member. You can copy trade that on Bitget, and I also have DCA bots set up on OKX, and you can copy trade my DCA bots as well, but you do have to be a member of Capital Club to do that. So first things first is you have to use the links down below to join up to OKX or Bitget, then join us in Capital Club, and then once you're in there, you will be able to see all the instructions and how to set up your copy trading. As always, if you learned something new on this video today, be sure to smash that like button, hit subscribe if you're not already subscribed, and leave me a comment down below and let me know if you also have any of those coins that we covered on today's show, or whether you're going to potentially ditch the same ones that I'm thinking of ditching. Have an amazing rest of the weekend. I'll see you guys on the next show.